day. Hi, Epstein with your agriculture wrap-up for this Thursday, Halloween. Notice the color I'm wearing. This is October 31st, 2019, about 2:05 in the afternoon. You know, not a bad day in the grain market considering the drops that the market had, and they came back to finish near unchanged. What took the market by storm today, and I know a lot of people think it's going to be that the House voted to go ahead with the impeachment inquiry on President Trump. They voted in favor of doing that. So in theory, it's an open impeachment inquiry. Of course, they're still behind closed doors today. You figure that one out, but it doesn't matter. I think what it really did was the market got nervous about a story today from Bloomberg where they were talking on their reporter traveling through China, and that it does not appear that the second phase of the trade deal has any traction going for it without full removal of tariffs. Then there might be something done. But one of the things Mr. Lighthizer has said is no, that's not going to be the case. The first $250 billion in tariffs they want to keep in place. We'll see. Let's get to phase one. And I think the market rethought it. I certainly was wondering today when the stock market broke as much as it did, I was going, wow, we knew that there was going to be a vote today. I mean, it was a foregone conclusion that the Democrats had the votes necessary to go ahead with the impeachment inquiry phase of this, to vote in favor of that. So when you think about it, I wonder if that wasn't the second part. When we take a look at the market, for the week, you're down 3.5 cents. And if you look outside in Chicago, we have the most snow on the ground ever for Halloween. I just read that statistic. So we're getting plenty of it. Yesterday it was the suburbs. Today it's actually moved into the city right now. It's very cold. It's going to stay that way for a bit. And when you go into the farmland, can you imagine what they're having their problems with? So the question, of course, always is, does it clear up? How does the ground? Can you put tractors on it? You'll get all those parts of there. Then the moisture of the grains that you're bringing in. There's plenty of factors that work. You'll get to the word harvest lows soon enough. I don't know that you're there. You're still breaking down on the weekly chart. Bigger supports around the 887 level. And certainly if you got over the most recent high, I think you would then have traders proclaiming that for whatever reason the harvest lows were in. I don't see that just yet, and that would have to be on a closing basis. When we look at the daily chart, you see the better picture as the market's worked its way down. Now today's break low near the 910 carries you right into what we were talking here yesterday about, that the market had a support zone here and it's starting to work into that. You know, it goes all the way from this zone down actually to the 880 level because you can count this support and that's what we're testing. In terms of the swing line study, this is a chart without a swing line. The swing line looks like on a day like today, do you have a lower and low? And I set up 5 rules that look at lower highs, lower lows, where the settlements are, inside days, outside days that close higher, outside days that close lower. And each one of those rules determine where the line is drawn. And what I'm looking for are patterns, because so often you will hear analysts talk, the market's got a lower high, lower and low pattern, or higher lows, higher highs, whatever it might be. Well, it's a trend that they're talking about. And to break this trend, you've got to get back over 926 under the current formation to break that. That would neutralize the bear trend, but not start a bull trend, because no matter what you would do, you'd have a lower and low and a higher high right now. When you come over to key moving averages, we've been under the red line, which is the 18-day moving average of closes. I determine bias via where the market settles in relation to that average. When it's under it and the swing line is down, I am bearish. I'm looking for the market to work lower. Then I start looking where could potential support come in. I look at moving averages, window envelopes, and Bollinger Bands. I don't want to put too many lines on these charts. I do them in my morning subscriber video, and I explain them as we work through them all, and I think traders enjoy that. But right now, one of the possible support areas, the closest on the way down on moving averages alone, is 909.25. And then I put on for you another popular study called a Bollinger Band, and you can see that right here. Now, the first challenge of a Bollinger Band on the upside or downside is often, it is not the word always, It is the word often, is where I think professionals take money off the table. They may take their whole position, they may cut it down. It's what I teach. Is it always right? Nothing's always right, but it's a great, for me, not you necessarily, for me, rule of thumb that I follow. And I look at that at 912 and a quarter. Today that number was 912 and 3/4 because it'll adjust to the range of the market. We finished at 916, so I think the pros were effective in taking some money off the table. That does not mean the trend has changed. What I look at next is the market overbought or oversold or getting close to either? Well, you're oversold in this market. So I have an oversold market that goes down, coming from this 940 area into this 912 zone, the first challenge of the Bollinger Band. I think the pros took their money off the table. Beans ended up actually 3/4 of a cent higher. Rallies, well, I would assume 927.5 is a lot of resistance, and that doesn't mean you're going up there. That's just where I'm looking for the resistance. When I get to the meal market, you went down. Today's low is 301.50. 301.60 is the lower Bollinger Band. You hit it, bounced away. In the process, you have an outside day up. So to start any further leg to the downside, in theory, you've got to take out today's low on Friday or Monday. My problem is even if you do, you're right into the lower Bollinger Band, and that might be an area where you find some support for the market. Where's the resistance? Well, to get to it, at 306.60 to 307.20, the 100-day average in green, the red is the 18, you've got to cross the last high of 305.60. If you do that, you break the pattern of lower highs, lower lows. So that has my attention. I'm not saying it would be a trend reversal, because no matter even if you did it, you have a lower low, and then you'd have a higher high to get up there. If the meal's up that much, what do you think oil did? I think it would lose a little bit. And it's exactly what occurred. And in the process, you stepped out of the uptrend in soy oil. Now, if I take off the current action, you had a pattern here of higher lows. Do you see that? Not here. This to that. I don't know. That might be even then a higher low. We certainly had the higher high. And yesterday we started stalling with today's break in the market to 30.57 under a previous low. I have lower highs, lower low in place, but the bias is up. So that means I'm looking for the 18-day average to offer some support. And the market has now turned its momentum down as measured by the slow stochastic, but it's still overbought. Either of the numbers, the two lines that make up this oscillator of momentum that are over 70, in my opinion, are overbought. The traditional way is over 80. I'm not a traditionalist. I'm wearing orange, right? In the corn market, battlegrounds, the 18-day average of closes. The market made a lower low today than the previous day, and it did not have an outside day up. Now, it could throw out a short-term try to get higher signal by getting over 391 and a quarter, because that could give you higher lows, higher highs. Then I'm looking at this resistance area. What I think is going on, though, is it's going to spin around in the Bollinger Bands. It's waiting to get a reason to come out of that one way or the other. Here we are in harvest. We're going to be in November tomorrow. The farmers are working like mad to get everything done that they possibly can. Weather is now a big factor. We've already got the snowstorms in place and cold weather. You'll get some warmer days. November's not necessarily freezing, but as I said, in the Chicago area, and that means it's gone into southern Illinois, Indiana, different parts, we have a lot of snow right now. Get over 391 and a quarter, you negate the downtrend as a minimum, start an uptrend, and this could become a resistance zone if the market continues to break. The Bollinger Band's the support. In the wheat, you reach down just low enough under 504 and a quarter to be a problem in this market. So you stepped out of your uptrend. You now have a higher high, lower low. Now what the market did find is great support at the 100-day average. Keep in the back of your mind, it's worked down from 535 down to a low today of 501. So it's about, what, a 7% correction in the market. Found its support at that 100-day average. Momentum is still down. Bias is down. I don't see anything on this chart to turn the trend into an uptrend, because you can't get from this particular pattern a higher high, higher low, and I already don't have the lower high, lower low. So I'm just in the middle of no man's land. In the sugar market, battleground is this. You've got higher lows, you have higher highs. But this market keeps hitting the 18-day average, and in the process, the upper Bollinger Band is slip sliding into sideways action with the lower going there. In other words, we're in a spin. Going home, I think that the market's got a bull bias. It's over the 18-day average. The swing line is pointing up and momentum is pointing up. This is the resistance zones, 1261 to 1273. If you don't get up there and you take out 1224 without getting through today's high, you could end up with lower highs, lower lows. Just a difficult market, but I think the bulls have control going home. In the coffee, big resistance area. Been here, done that, overbought, just into that. The trend is up. It's been up. It's had the higher lows, and today just was another one of these higher lows, higher highs, but it's had a lot of trouble getting up and staying up into that 100-day average in the upper Bollinger Band. Cocoa, I've been saying I don't see a trend. I think there's a whipsaw market. You tried yesterday to get up to the upside. In the process, higher high. This low right here, if we take a look, was, what was that, 2420. This low was 2417. So going home, we had higher lows, higher high, and as I told you, I don't think there's going to be legs in this market. You have divergence. You were pointing down here. The market finished under the 18-day average. It has an outside day down, and the market went down to the lower Bollinger Band 100-day average. It's just not following through. I don't know that you'll even follow through tomorrow on the downside. You're already in oversold territory, and you've hit big support areas. We'll see what it's capable of doing. Fundamentally, remember what I told you. It's Ghana. It's the Ivory Coast. They've created these funds for cocoa, and I think the trade is having a great problem trying to figure out how to do hedging with that and so on. You're not only paying for the cocoa, you're paying money into this fund. It's a very strange situation. It'll work itself out. In the cotton, big break. Now, what happened today? This is an outside day up yesterday. When you have an outside day up, what I don't want to see is the low of an outside day up taken out the next day or the day after. If you're using 15-minute charts or so on, the same would go for them. If it does, markets often try to revert to the closest moving average or a Bollinger Band of some type. In this case, the averages I've got on this chart are the 18. You broke it. You went right down by it, and that's where the market tried to find its support. Did it hit it? Right on the button. 64.02 was the day's low, 18-day average 64.03. Momentum still pointing to the downside. I don't see a trend on this. In fact, this is what I call one of those ugly chart patterns where I don't even know where the swing line belongs. In the cattle market, a lot of resistance at the upper Bollinger Band. And some might say, well, momentum's starting to turn down. And it is. You lost some ground today. You were down 100 points in the market. If you lose the embedded reading with the red line closing under 80, well, then I look for price in the 18-day average to come together. That's not what happened yet. You're just losing some upside momentum. Feeder cattle at the other point of the spectrum are up at the upper Bollinger Band and a lot of resistance right here. And in the hog market, you don't have a trend any longer. You got a lower low, higher high, momentum oversold, two levels of resistance. The trade has been waiting to get good news on pork purchases out of China, but as it stands, we don't even know that we're going to get to a phase one deal out of China. A lot of complications today. Coffee was an interesting market that I was looking at, and this morning in my subscriber video, I pointed out a number that I thought I got from a pivot point. I was showing traders because you had lost the embedded reading using pivot points what my theory was, and this was at 6 in the morning. Coffee market opened, hit the key numbers, and as it worked out, that trade happened to work for the day. There's plenty that don't, believe me. But the whole key here is I've created 3 videos to teach you how to use pivot points and momentum with them. Then during the mornings, if you're one of my subscribers to my morning video, I'm prepping you to have ideally out at 7 in the morning, no later than that, my morning subscriber video where I'm reviewing all the charts for you, 40 of the futures charts, 5 ETFs to give you trading ideas going forward as the key reports in the U.S. come out and so on and so forth. I'm also reviewing with you at that point, just so you'll know, the Asian news, the European news, what seems to be online here for today that you have to pay attention to, and then I tie sometimes it in with these type of studies. So if you're interested in seeing this study, it's really simple. It's a 3-part video. It's free to you. And the first part's going to teach you what is a pivot point. Second part's going to teach you how to apply it on a chart. And the third's going to show you how to tie together momentum with it. How do you get to it? Go to our website. We have free offers. This is one of them. Click on it. We'll get it in your hands. If you're watching me on YouTube, you can click right here. That'll take you to the free offers page as well. In the meantime, you can call us. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.